Chris Conway from the Australian Stock Report, who joins us live from our Melbourne studio. Chris, good afternoon to you. Always a pleasure talking with you. Now, let's just talk broadly about the market today. We'll delve into some of the top and bottom performers in a moment. But taking on from the positive lead, that risk on sentiment overnight, what have you made of today's performance through this Tuesday session?
Good afternoon, Leanne. I think we're getting about what we expected this morning, maybe slightly better. Of course, there was the pivot back to earnings in the US overnight, but and also the relief, I guess, from the precision and surgical nature of those strikes in Syria, and that it didn't escalate and there were no Russian casualties. That was all priced in yesterday during our Asian trading session. Of course, US futures were up, and they didn't really budge from where they were in the Asian session overnight. So, you know, it really was a flat leading into today's session. And, you know, as I was walking to the studio, we're up 15 points, which is probably 2 or 3/10%. So slightly better than what we were expecting. And I think it's probably the materials plays, commodities linked plays that are doing the heavy lifting today.
All right, well, let's talk a little bit more about some of those commodities plays there, because there certainly are a couple sort of rounding out the top and bottom movers. Whitehaven Coal, interested in Whitehaven's report here, and just, well, look, it's obviously been taken well by the market, up 3%, certainly benefiting from the rise in the underlying commodity. They've got that, you know, very tight correlation. What did you make of the report, and has it been good enough, I guess, to justify the move by the market today?
Yeah, I think so. It was a 10% increase in coal shipments or revenue in the March quarter as compared to the same period last year. So not an insignificant increase. And the company itself said that, you know, demand should remain strong, provided that, you know, producers don't try and add more capacity themselves and continue to be buyers. So there's a few caveats in there. You know, this is really about how you view coal prices, whether or not you think those gains, as you rightly mentioned, Leanne, are sustainable. But yeah, look, I think a 3% rise on the back of a 10% increase in shipments is probably about where the market should be. And if you like commodities and more particular metallurgical coal, there's no reason why you wouldn't continue to be a buyer of Whitehaven.
All right, let's talk about some of the ones on the other end of the list, the underperformers. AMP Capital continuing to be grilled there by the regulators with the Banking Royal Commission underway. A fair big hit it's taken today, the worst performer, still down 3.2%. What have you made so far of what's come out, and I guess the reaction that we've seen from the market?
So I don't think that what AMP said today was any more shocking than some of the other revelations that we've already uncovered via the Royal Commission. Obviously, lying to regulators is never a great thing, and you're going to take your lumps on the day that that news comes out. But in the context, as I said, of what we've seen from the Royal Commission thus far and some of the other players that have had to give evidence, you know, I don't think it's, you know, 10 times worse than the worst thing we previously heard. Just having a look at AMP more broadly, you know, I had a canvas of what a lot of brokers think about the stock at the moment, and a lot of them have quite lofty price targets up above $5, you know, around $5.20, $5.30, and had them coming out of the last results. Now, the stock has fallen really, really sharply, not just today, but in recent weeks as well. So it seems what with some positive sentiment coming out of their recent results has turned negative, and today is just one more negative nail in that coffin. Probably there's some value there somewhere, but, you know, me as a trader, I don't try and catch a falling knife, so I would be staying away from this one.
All right. What about Bank of Queensland? It's also on that list, as we just saw there. Even though we saw a rise in those profits, statutory profits up 8%, cash earnings up 4%, and that dividend. But is this just simply a case of not meeting market expectations, and that's why we've seen that share price falling today?
Today, yes, I would really think so, Leanne. The market expectation for the bank's preferred method of measuring profits was 187 million, obviously came in at 182, as you said. So a slight miss. Everything else seemed to be relatively okay. There are some cost pressures coming back in, but I think this potentially speaks more to the broader story and a theme that I'm looking at the moment, that, you know, it's the big players that will tend to do better than the regionals. So, you know, obviously there's pressure on net interest margins in a low interest rate environment. The big players have a better capacity to weather that and maybe carve out some costs in other areas of their business to make sure that they're meeting their bottom line numbers, whereas the regionals simply don't have that capacity. So, yeah, like I said, I think the miss is why it's off today, but I think more broadly, people would be looking to the big banks rather than the regionals.
Okay. Look, looking ahead, there's a lot of production reports obviously coming out from the mining companies. A lot we've been watching today. We spoke about Whitehaven Coal, and it looks like they're going to be expanding. They're acquiring Rio Tinto's share of the Winchester South Metallurgical Coal Project. I suppose that really goes to the idea that Rio is continuing to divest some of those non-core assets and some of those coal assets. What do you think we can expect from those big guys, the likes of BHP and Rio later on in the week? Rio Tinto, in fact, tomorrow.
Haven't thought too much ahead to the production reports, Leanne, but I would hope that they were strong. Look, I'm a holder of BHP at the moment. The reasons why I like it are because of the diversification. Obviously, they have the potential to sell off their shale division and reap, circa $10 billion windfall, and maybe some capital management in there, returning capital to shareholders as well. I have liked BHP for a while now, sub 30. It's my preferred commodities-linked play. As for Rio Tinto, similar sort of story. They'll sell off assets that aren't performing. They'll focus on their core competencies. They'll continue to rationalise, and they do have, some diversification. Obviously, not as broad as BHP. But again, I like the big boys at the moment. My strategy at the moment, even from a trading perspective, is to focus on the big end of town, because if this global growth story continues to play out, I think it's the bigger players in sectors and in markets that will stand to do the best. So I'm really looking at sort of the top 20, top 50 at the moment, and almost excluding everything else, simply because, as I said, from a broad perspective, I think they're the stocks that stand to benefit the most.
When you look at BHP specifically and you say that you like this one, we're still waiting to hear further detail on the divestment of the US shale assets there. And look, there's been a lot of interest, obviously, in the energy space. We know Santos, the bid from Harbour Energy. I know after that there were a couple of analysts that came out and said, look, because of that, maybe they'll be getting an even better price for those US shale assets. I suppose hoping to hear a little bit more detail from their report this week on that. But are you optimistic about that divestment there and the outlook going forward without those US shale assets?
Yeah, I'm certainly optimistic about the fact that they'll be able to get rid of it. It's just, of course, the price at which they're able to do that. Pardon me. I know Shell and someone else, the name escapes me at the moment, but Shell and another partner were poking around in the data room looking at it. So if you've got a big name like that, it sort of lends to the fact that these are quality assets. It's just BHP overpaid for them and now is pivoting away from them because, again, they want to focus on things that they think they have better competencies in. But it's not to say that these assets are rubbish. And yes, all this consolidation in the space and even globally would suggest that maybe these assets are now more attractive. But cancelling out all of that, I think, is the fact that oil prices have been on the march higher, and that's really what's driving up the price of any oil company, any oil asset at the moment.
Just to finish up, and look, to head across to China on the economic calendar, we saw those figures today, largely meeting expectations there with the slight miss or the slight beat there. It's not often that you see China, I guess, missing on expectations. Does that go to the idea that will continue to underpin commodity prices from here if you look at still the huge amount of growth that's coming out of China?
Yeah, certainly China, and yeah, I don't like to be a cynic, but it would be a rare day when they come out with numbers that miss what they had previously guided to. So, we all take it with a grain of salt, but undeniably that is a huge and growing economy, and they still have an insatiable demand for commodities that we produce. So it holds companies, commodities-linked plays here in Australia in good stead. But more broadly, it's that global growth story. Europe was a basket case 18 months ago. Everyone was worried about America. Now, those two very significant regions are faring much better, if not, really strong in the case of America. So, you throw into the mix Trump wanting to spend, what is it, $1 trillion on infrastructure. Demand for commodities doesn't necessarily have to come just from China, but of course here in Australia we would certainly like to see them very strong because it helps our cause.
Excellent, Chris Conway. We'll leave it there. Appreciate your analysis as always in your time this afternoon. Thanks.
Thanks, Leanne. Cheers.
That was Chris Conway there from the Australian Stock Report we mentioned.